illicit finance on crypto blockchain 10 years back and now. What is your general sense of it? I heard you saying just now that a lot of illicit finance will move on chain. So which I find a little bit sort of contradictory. Yes, we'll keep privacy coins, mixers, blenders out of that, and we'll get to that. But in general, how have you seen in the last decade? Is there a significant scaling of illicit finance on blockchain?
Yes. So if you were to look at the numbers that the blockchain analytics companies put out, and I'll just use Chainalysis just because that's the company that I used to work at. But if you were to look at the numbers that they do put out, and if you were to look at the numerator of that number that they use to get their percentage of illicit finance, meaning the amount of illicit activity that they actually measure and track, it has grown, sometimes doubled year over year. And I think the thing that people don't realize about that is, did you ever see one of those pictures where like it starts out really fuzzy and it starts to sharpen, and at a certain point you're able to see what it is and you're like, oh, it's a boat. Oh, it's right. But it has to kind of like come into focus. That's what blockchain analytics does. So over time, as they get more and more information, they're able to enrich addresses with identification information. Your average address, if you just open address tomorrow and you use it, if you don't scam anyone, if you don't run it through a service, like you can actually stay pretty anonymous in Bitcoin if you do certain things for what we would call OPSEC, operational security, right? You can actually still be anonymous on a public blockchain. It just gets very hard because the more you use it, you leave these little breadcrumbs. And over time, the blockchain analytics companies and intelligence companies like gobble up that data, and then they start to enrich it and say, oh, this address is actually Akshay, right? The problem with that is that means that over time, we get more and more visibility into what was in fact illicit, right? You commit a crime tomorrow with that address, but we're not able to know for a year or 2 years that, oh, that was actually this theft, this scam, right? So every year, the blockchain analytics companies sharpen the picture, and they actually go back and they do that over time. Meaning it's actually kind of hard for a compliance officer, because whereas a transaction in TradFi happens, it's done. Nobody ever analyzes it again. In crypto, a year or 2 later, you could get an alert saying, as it turns out, that money was criminal money. And now you're having to go back and after the fact say, oh, well, now we just found out that this, but there was no way for us to know it at the time because they hadn't yet identified it as illicit finance. So if you were to go back over time and look at the blockchain analytics companies that put out these numbers, the fraction of what percent is illicit, if you look at those numerators year over year over year, they increase. And that's the best indicator of what's actually happening in illicit finance in crypto. Is that's a floor, meaning this is the amount that we have been able to identify. It grows every year. We add to it, we sharpen it, and we know that law enforcement and other agencies have off-chain data, that exchanges internally have off-chain data that would enrich this and make it higher. So we know that the numerator of that is the at least this much is illicit in terms of raw numbers.